27 September 2023, Wednesday, MAO with Kel. Now, by 1st of October, the US government may shut down again. Oh my goodness. This is like probably the third time happening in the last 5 years. And will the stock market be affected? Well, it is possible. So I'll tell you more in details. Let's go. Right, before that, disclaimer apply as usual. And thank you, Ames, for the kind sponsorship. Now, first of all, will the US have the shutdown? Well, apparently now it's everywhere. Looming shutdown is ongoing right now. Counting down to that because we are 5 days away from the shutdown, in fact. And millions of federal workers are at risk. All right, really, no kidding. So if this is going to happen again, will the stock market shake? Well, this is something to watch out for. So how far are we? You're 5 days away. Yes, only 5 days. By 1st of October, that will be the shutdown. All right. And the thing is this, you can see the House is now all pushing the Republican to come involved in this so that we can get things done. But of course, as we can see right now, all right, government shutdown are always bad news, no matter how you look at it. For McCarthy, and hundreds and thousands of federal workers will be furloughed, obviously, for the wide range of services, from economic data to nutrition benefits. All right, so this is not going to be fun. But the worst thing is this. The credit rating agency like Moody's will be watching this very closely, because if this is going to continue, the US credit worthiness, right, is going to be again in the limelight. And of course, another cut in the rating is not going to be good at all. And surprisingly, do you know that for Moody's itself, right, Singapore is actually at a higher rating than the United States of America. Oh my goodness, this is incredible. So that's why I can tell you this, that this is not going to be a fun time for US itself. Now, with $33 trillion in debt, and it just increased by $1 trillion, all right, in a very short period of time, this is really no joking matter. So now the thing is this, due to the this act itself, right, in 1884, amended in 1950s, apparently the federal agency cannot spend or obligate any monies without an appropriation or approval from the Congress. So in short itself, if the Congress doesn't approve that, certain agency cannot function at all. This is really incredible. This is actually a government shutdown. So this is where they had to fight among themselves and then get things right. But of course, again, the Republican and the Democrats are not going to give way. Let me explain to you why. So by right itself, the easy way out is that the House representative will pass it to the Senate, and the Senate will pass it to the President. That is what it should be done. Easy. But the problem is right now, the Republican is in the House and the Democrats in the Senate. This will give a big fight between both of them, and that's why it's not going to be easy thus. So if you look at it right now, by 1st of October, if they don't do it or come to an agreement, a shutdown, it is possible. So how many shutdowns are there? Well, apparently there are 20 federal government shutdowns since 1976, with the longest one in 2018, 2019, whereby it dragged on for 34 days, remember? And an average is also 8 days. Okay, so what happened? So interesting. The S&P has been higher during 10 of those shutdowns and lower in the other 10. So in short itself, right, it's actually a break even. And the crazy part is that the average return for all the shutdown, meaning plus and minus, is exactly 0%. So seriously, so the thing is this, we're going to be expecting a bipartisan measure to come in last minute to save the day as usual. But the problem is this time around, 8-day shutdown, what to expect, right? So let's look at numbers here. So apparently, right, in 1979, the year I'm born, okay, there were 11 days of shutdown and the S&P lost 3.9%. Now, you can see that these are the years whereby the market down by about 1 to 3%. But of course, at the same time, there's a period of time whereby in the year 2018, where the shutdown was 34 days and the stock market went up by 10.3%. So it seems that, right, the shutdown may not be a bad problem in a way. So again and again, we have been advocating this. We know that this is happening. It could be happening soon again. So that's why when we call you to sell right here, when the indicators is coming down, we know that the market is going to come off. And for those people who have believed in us, they were shorted the market and profited like us, like this. Okay. So the question is now, is it a time to take a short position? Well, I will say this, guys, you to go back to this. At the moment now, the market sentiment itself is kind of basically average out. The bullishness, the neutral, the bearishness is kind of 30% overall, 33% overall. So actually itself, the market is kind of mixed right now. And the thing is this, Morgan Stanley says that we're on the verge of triggering billions in forced selling. Now, Morgan Stanley, as we all know, has been pretty bearish all this while. And they came in and says that, right, the point of activating significant forced selling is getting much closer. So what's happening right now, based on the seasonal pattern, right? Since 1928, the median S&P return for the last 10 of the 11 days in the September is negative. The last 10 of the last 11 days. So now we are in this period of time. So it's negative. So of course, we all know that, right, things will get even more dicey come to October, because October is well known to be volatility month. The thing is this right now, you can see that Mike Wilson says that the consumer stocks are set to tumble on student loan restart, high gas prices, and of course a weak housing sector. As a matter of fact, he says that the stock market now is stuck in a late cycle muddle. All right, what does he mean? He basically means that right now a breakdown is going to happen again, and he feels that, right, if not for the Magnificent Seven, all right, the remaining 493 S&P stock would have dragged the market out. Indeed, based on some mathematics being done itself, right, the S&P itself is up because of the Magnificent Seven. If the 7 counter wasn't around, the S&P should be flat, if not in negative zone right now. So the question is this, would the Magnificent Seven be pushed up again to basically pull the market up? Well, not too sure. We all know that Apple is coming down recently. It's not a good news at all. But the most important thing is this now, the Treasury bond ETF is at a very low end. And in fact, look everyone, this is where it gets a bit concerning here. Now, this is the RSI reading here. All right, and that's where we are right now. You can see we are now at the low end, where the last time we saw something like this, it happened in year 2010 to 2011. And every time it goes there itself, the market will rebound at the 88 factor here. Now, for those like this Bill Ackman and friends, or Michael Burry, they have shorted around this area, they have made good money. So I just suspect that a very high chance that there will be profit taking soon. So of course, the treasuries is coming down because the yield is going up. So if the treasuries do rebound because of the oversold reason, is the yield coming down? But the problem is it's not. I mean, the thing is right now, there is still ongoing expectation that the yield will go higher, and that's the reason why the US dollar is going up. So although technically we should see a rebound on the treasury, but the fundamental just doesn't support. And the worst thing is this, if you put the treasuries with the Dow Jones, we get a very interesting point here. Let's take a look here, guys. You can see over here itself, right? When the treasuries actually went up, the stock market came down back in 2009. And it happened again. When treasuries goes up, the stock market came down. And you can see that it repeated that several times. So if the thing is this, we are now still back to the same point of technical, and shorter treasury goes up itself, are we going to expect the stock market to go up or down? This is going to be interesting, right? Because if that's the case itself, the stock market has more downside to go. So this is whereby this is something that I feel that traders should be very, very careful. So I believe that the market is a kind of oversold right now, but the long term is that the selling should continue. So what do you think? Let me know in the comment box itself, right? I hope you enjoyed this video. This is Cal signing off. Take care, like, subscribe, and share my video. Bye-bye.